Hey, what's going on everyone? Thanks for checking out this video. My name is Travis from Master the Market, and this is going to be a quick video talking about the craziness that we've seen in the stock market over the past couple of days with GameStop. I'm going to break down that situation and explain exactly what a short squeeze in the stock market is. So hopefully you can use that information to be more prepared for the next one in case you feel that you've missed out on the GameStop situation. So anyway, with that being said, it's very important that you first know exactly what short selling is to understand, of course, what a short squeeze in the stock market is. And simply put, what short selling is a way of trading that allows you to profit from a stock actually going down. And to do that, what you do is you borrow shares from your broker that you're going to sell high, and then ideally the price of the stock is going to fall, and you're going to be able to buy those shares back lower and profit the difference between where you bought and sold. So in other words, let's take GameStop for example, and just look at this intraday chart here. If you were to buy GameStop early on in the morning here today at $300 per share, and then it spikes up and you sell at $380 per share, in that case you would have made $80 per share on your investment. And the same is actually true if you would have short sold at $380 per share, and then later on covered that short position at $300 per share, again profiting $80 per share, but this time you're simply selling high first and then buying low later on. Okay, so now that you know a little bit about how short selling in the stock market works, it's also very important that you understand how supply and demand affects the stock market in order to understand a short squeeze. So with that being said, at the end of the day, the stock market is going to move solely based on supply and demand. Many people think that things like news and press releases are the sole reason that stock prices go up and down, but realistically what those things do is simply impact the amount of supply or demand at a certain level for any given stock, and that supply and demand is then what is going to directly affect the price of that stock. So in the market, the demand is represented by the buyers and the supply is represented by the sellers. Simply put, when there are more buyers than there are sellers at any given price, that's going to cause the stock price to rise from that level. And on the opposite side of the spectrum, when there are more sellers than there are buyers at that price, the buyers are simply not going to be able to break through the sellers, and that's going to cause the prices to fall from wherever that level is at. So anyway, with all of that being said, what a short squeeze in the stock market is when there's a very heavily shorted stock that is going to continue to rise up, and once it continues to rise, the short sellers are forced to actually exit out of their short positions in order to cut losses and manage risk. And to exit out of those short positions, the way that they do that is to actually buy back those shares that they borrowed. And the short sellers buying back those shares, in addition to anyone else that's simply buying the stock, causes a lot of demand for that stock, and is what then causes the stock to continue spiking up and squeezing higher and higher and higher. So the more shorts that there are stacked into a stock, the more potential it has for a big short squeeze in the market as those short sellers start to cover and buy back those shares. So with the GameStop situation, what happened is GameStop was a very heavily shorted stock. In fact, there were actually major hedge funds with billions of dollars worth of shares short selling GameStop. And what happened was retail traders like you and I all kind of came together, especially of course on the subreddit Wall Street Bets, and started to pretty much simultaneously buy into GameStop, of course causing a ton of demand, pushing the stock price higher. And as it went higher and higher and higher, hedge funds started to lose billions and billions of dollars, and they realistically had no choice but to cover out of those short positions, hence causing the major short squeeze that we saw in GameStop, along with other stocks such as SPCE, AMC, Bed Bath & Beyond, BlackBerry, and even many others over the past week or so. So I wanted to share this website, which is highshortinterest.com, and what they do is show you which stocks in the market have a very high percentage of their float being short sold, making them of course good candidates for a potential short squeeze in the near future. And of course at the top of this list you can see GameStop and some of the other big runners over the past couple of weeks. But you have to keep in mind that even though GameStop was a very well-known one, short squeezes do happen very often in the stock market. GameStop was not the first one, and it's definitely not going to be the last one. So it can be very beneficial to check out this list on a pretty regular basis and keep in mind which stocks have been heavily shorted. Keep an eye out for them because they may be another potential short squeeze candidate in the near future. And another way that you can keep an eye out for the next potential GameStop situation and the next potential short squeeze candidate is to go over to the website FinViz. And FinViz actually has a free screener on the website in case you haven't used it yet. And all you do is go up to screener at the top. And what we're looking for is these high short interest stocks. So we're going to go to float short of at least 30%. And we also want to see that there's strong volume associated with these stocks, because if you look at any of the big runners over the past week, GameStop, AMC, BlackBerry, Bed Bath & Beyond, Nokia, or whatever it may be, all of them had very strong relative volume associated with their short squeezes as well. So in order to find those stocks, we're going to go ahead and select a relative volume over 2. Just to kind of narrow this list down a little bit further, and this is going to give you a list of stocks that all again have a high amount of their float being short sold, along with a recent spike up in their volume, which at the end of the day are the two main things that can cause a major short squeeze in the stock market. Okay, so I know this was a very quick video compared to some of the other ones here on my channel, but I just wanted to simplify as best as I could the situation that's been going on with GameStop, because I know a lot of new traders have been getting into the market and looking to take advantage of this short squeeze opportunity. But anyway, with that being said, thanks for checking out the video. I hope it helped, and if you want to find more information about how to day trade, swing trade, and even long-term invest, I have a ton of education in the videos here on my channel, so make sure to check those out and subscribe if you don't already. And you can of course check out our Master the Market programs, which are going to be linked down below in the description as well. But anyway, thanks again for watching. I hope you enjoyed, and good luck with your trading. I'll see you in the next video.